Welcome to Bhutan e-learning project. My subject is Accountancy, Key Stage 5, and my name is Chandrabadur Pradhan, and I'm currently teaching in Dechincholing Higher Secondary School. So in this lesson, we'll be talking about accounting for investment property. Here, in this slide itself, you can see image of a building and a land. The moment you look at these two pictures, you can identify that investment property is something to do with land and building. Before going into today's lesson, let us see the objectives of today's lesson. So the first objective is explain the concept of investment property. Second objective is explain the recognition and measurement basis for investment property. Third one is record accounting transaction related to investment property. Fourth one is discuss issues in classification of investment property. And the last objective is present investment property in financial statement. Now let us look into the concept and definition of investment property. As per Bhutan Accounting Standard 40, it defines investment property as a property, be it either land or a building or a part of building or both, held by the owner or by the lessee under a finance lease to earn long-term rentals or either for capital appreciation, or it could be both long-term rentals as well as capital appreciation. And we also have to know that investment property is not for use in the production of supply of goods or services, either it is not for administrative purpose, as well as investment property is not for sale in the ordinary course of business. Let us see the examples of investment property. So first example out here is land which is held for long-term capital appreciation. So here the owner or the business entity will hold the land for longer duration so that the price of that land in the market will increase. So if the owner entity is holding that land for that kind of purpose, here that land will be treated as investment property. Second one is building leased out under an operating lease. Here you have to be careful that whenever owner lease out, make sure that lease should be on operating lease. Until and unless that lease is not an operating lease, we cannot term that building or lease as investment property. Third one is vacant building held to be leased out under an operating lease. And fourth one is property that is being constructed or developed mainly for future use as investment property. Right now, the owner is in the process of developing or constructing the property, but the intention of the owner is that the property in future should be used for investment property. So that's why that property which is being developed or constructed right now should be treated as investment property. Now let us look into the non-examples of investment property. So first one out here is property held for use in production or supply of goods or services or for administrative purposes. Remember that in our earlier lesson we have talked about property, plant and equipment. And the property, plant and equipment definition was that all this property which were held for production or supply of goods and services or for administrative purpose. So here this property should not be termed as investment property. Instead, it should be treated as property, plant and equipment. Let us look into the second non-example. Second non-example is property held for sale in ordinary course of business or in the process of construction or development for such sale. Here, the owner, their main focus or the main business is to construct building or develop land in order to sell. So here they are not treating it as investment property. In fact, it should be treated as inventories. Let us look into the third non-example. Third non-example is property being constructed or developed on behalf of third parties. So here the entity is constructing building for other people or third parties. So here this property should not be treated as investment property. Instead, it should be treated as construction contracts. Next one is owner-occupied property. So owner-occupied property simply means that property which is occupied by the owner, either for the purpose of producing goods or services, either for supplying goods or for using as administrative purpose. So here in this property, we should need to apply BAS 16, which is property, plant and equipment. And the last one is property being leased to another entity under a finance lease. Remember earlier I've told you that when can we treat lease as an investment property is when the property is leased to another entity under operating lease. But here it is saying that property is being leased to another entity under finance lease. So here that property should not be treated as investment property. In fact, it should be treated as lease, which is under Bhutan accounting standard, it is BAS 17. So let us look into the recognition criteria of investment property. When can we recognize investment property and when can we recognize this in our financial statement? Investment property is recognized as an asset when it is probable that the future economic benefits are associated with the property will flow to enterprise, and the second one is the cost of the property can be reliably measured. Remember that investment property is also an asset, so here we'll apply the definition of assets as well. Here recognition criteria is only two, that is, it is probable that the future economic benefits that are associated with that property will flow into the enterprise. It will come as an income to the enterprise. And second one is the cost of that property should be measured reliably. Now the journal entry for passing entry for investment property is when we are purchasing investment property, your journal entry is investment property account debit. Here asset is being debited. Investment property is being debited to, it could be either paid through cash or payable or equity or either through other assets. And second journal entry is regarding when the owner wants to transfer use of a property from property, plant and equipment to investment property. It is possible, owner can always do that. Now if the owner is doing that kind of transferring, during that time the owner have to pass this journal entry, which is investment property account debit to property, plant and equipment. Let us look at this activity. This activity basically focuses on trying to identify between investment property and non-investment property. So let's go through the question. Company A reported all items of land and building as fixed assets before adoption of new accounting standards. In order to improve its reporting and accounting information, Company A adopted Bhutan accounting standard in which it is required to classify its assets under different standards. The company management provided you with the list of their assets as follows. First asset is 15 acres of land is used for construction of office building and car parking. Second one is 10 acres of land is held for indeterminate future use. Third one, 20 units of buildings were used for administrative purpose of the company. Fourth one, 10 units of buildings are rented out to tenants. Next one is a vacant building owned by parent company and to be leased out under an operating lease. And the last one is Company A has a real estate department that develops land and construct building for sale. They currently have 20 units of building for sale. Now the main question out here is you are required to discuss how Company A will account for these properties after adoption of new accounting standards. So let us look into the solution of this question. So here we are required to discuss how Company A will account for these properties after adoption of a new accounting standards. So let us look into the solution of this problem or question. First one, 15 acres of land is being used for construction of office building and car parking. Here you can see that land which is being constructed is being used for office building. That means business entity, they are using it for themselves. It is owner occupied property, as well as the car parking that they are constructing. It is also used by the business entity itself. So this one is not treated as investment property. In fact, it should be treated as property, plant and equipment, which falls under BAS 16. Second one is 10 acres of land is being held for indeterminate future use. Indeterminate out here means the business entity is not sure for what purpose they are going to use this property in future. So this time here we have to treat that particular land as investment property, which falls under BAS 40. Third one is 20 units of buildings were used for administrative purpose of the company. Here again, the company themselves is using that building for their administrative purpose. So it is again owner occupied property. It will again fall under BAS 16, property, plant and equipment. Next part of the question is 10 units of buildings are rented out to tenants. So here the business entity have provided the developing for rental purpose, or they have rented out the building to a tenant. So this here in the definition, in the recognition criteria or definition itself, you have seen that investment property should be mainly for rental or capital appreciation. So here that particular building is being rented out, so this part of the building should be treated as investment property, which falls under BAS 40. Next one is a vacant building owned by parent company. Here the parent company is company A itself. So company A is having a building and they are leasing it out under an operating lease. Remember that earlier I've told you that if a company lease out under operating lease, that lease or that property should be treated as investment property. So here in this question, the building is being leased out under operating lease, so this building should be treated as investment property. The last part of question says that company A has a real estate department. You all know what does a real estate department does. So they basically develop or construct building and they sell it to other. So here company A has a real estate department that develops land and constructs building for sale. So here the main purpose of that company A's real estate department is to construct building and for sale. So they are not leasing it out to other party under operating lease, neither they are providing it to rental, neither they are holding it for capital appreciation. So here this part of that land and building should be treated as inventories. It should not be treated as investment property. So once we treat this as inventories, it should be accounted under BAS 2 inventories. So let us see the measurement criteria of investment property. Measurement criteria of investment property are basically divided into two parts. First is initial measurement and second one is subsequent measurement. Let us go through the initial measurement first. Investment property is initially measured at cost. Remember that for property, plant and equipment also we have measured property, plant and equipment initially at the time of purchasing at cost. So let us see what does cost actually includes. So cost includes purchase price if we are purchasing that investment property. It also includes construction costs if it is being constructed by the owner or the business entity itself. And it will also include transaction costs and duties, and it will also include directly attributable costs such as legal fees and transport cost. However, in case of construction of investment property, so remember that investment property could be acquired either through purchase or either through construction. So at the time of construction of investment property, you have to remember this point that abnormal waste of materials and general costs are excluded from the cost, which means we should not be adding abnormal waste of materials and general costs with the cost of that particular investment property. The second one is subsequent measurement. Subsequent measurement means measurement which is done in the next accounting period onwards. So in the subsequent year, an entity can choose either fair value model or cost model. It's upon the company. But an entity must apply the same accounting model for all investment property and must be applied consistently over the years. Once we choose either fair value model or cost model, that entity should need to apply that model throughout the accounting period, as well as it should be applied to all the investment property. Now let us see what exactly is fair value model. Investment properties are measured at fair value, which is the price that would be received to sell the investment property in an orderly transaction between market participant at the measurement date. So it basically means it is at that particular point or at that measurement date, the entity tries to find out what will be the market value of that particular investment property without including the transaction cost. So that is called as fair value of that particular investment property. So gain or loss arising from the change in fair value of investment property must be included in income statement for the period in which it arises. Here what it's trying to say is that earlier if the company or entity have used cost model, and now in the second accounting period, if the entity is changing their measurement to fair value model, while changing from cost model to fair value model, if there is any gain or loss in that change, that gain or loss should be directly accounted under income statement. Please remember that depreciation is not required if an entity applies fair value model, and fair value is updated regularly. Whereas if the company applies cost model, they have to depreciate it. It is same like in BAS 16, property, plant and equipment, where we have to depreciate. Whereas if the company applies fair value model, no depreciation is charged. Let us look into the journal entry of investment property under fair value model. If there is gain or increase in fair value of that investment property, your journal entry is investment property account debit to income statement. And if there is decrease or loss in fair value of investment property, journal entry that you have to pass is income statement to investment property. In earlier journal entry, income statement is credit, and in second journal entry, income statement is debit. Here you have to know that golden rule of accounting, that if debit all expenses, credit all income and gain. Let's look into the cost model. Under cost model, investment property is measured in accordance with requirement set out in BAS 16, which means we have to follow the same procedures which have been applied under BAS 16 if the entity applies cost model. The value of the investment property will be reduced by the amount of yearly depreciation and impairment loss if there is any. So the formula for calculating value of investment property under cost model is cost minus accumulated depreciation minus if there is any accumulated impairment losses. And the entry that we need to pass is depreciation account debit, impairment loss account debit to investment property. Now there are some issues in classifying investment properties. Business and entity always face this kind of issues. Now let us simply go through a few issues of classification of investment property. First issue is if the owner, the business entity, uses part of the property for its own use and part of that property is being provided for rental, or either they keep it for capital appreciation, and the portion can be sold separately or leased out separately. They are accounted for separately. It means that if the company is owning or having a building, and if the company leases out a part of that building for rental or either for capital appreciation, and rest part of the building is kept for own use, in this kind of situation, what we need to do is the owner occupied property is accounted as property, plant and equipment, and the rented out property is accounted as investment property. So we have to know that which part is rented out and which part is owner occupied property. Now the second issue out here is, in the event if two components, partly owner occupied and partly rented, are within one building itself, it is assumed that they may not be sold separately. So here we have to know that it is assumed that this building is not sold separately. So therefore the significant component between the two Here between the two means they are talking about owner-owned occupied property and rented property. So from these two, whichever is having significant component, we have to treat that for accounting treatment. If the entire building will be classified as investment property or otherwise. So let us see an example regarding this classification issue. ABC Limited owns 2 freestanding buildings. Remember, here we are having 2 buildings. ABC Limited owns 2 freestanding buildings on 2 separate sites in Thimphu. The first building is used by ABC Limited for administrative purposes, and the second building is leased out. Here leased out, they are leasing out in operating lease to XYZ Limited. Discuss the accounting treatment for the above entry in ABC Limited's financial statement. So here you can clearly see that ABC Limited is having 2 freestanding buildings. One building they are using for their self-purpose, which is administrative purpose, and the other building they are leasing out to XYZ Limited, and here that lease is operating lease. Now, how are we going to treat this in ABC's Limited financial statement? It is very simple. There are 2 distinct and separate components, owner-occupied and leased out. Since 2 components are on separate site, it is assumed that they can be sold separately. The owner-occupied portion must be disclosed as property, plant and equipment under BAS 16, and as it is used for administrative purposes. The leased out portion must be disclosed as investment property under accounting standard BAS 40. Let us look into the second example. ABC Limited owns a building in Paro which is used for administrative purpose. The top floor of the 4-storied building is leased out to XYZ Limited. Discuss the accounting treatment for the above property in ABC's Limited's financial statement. So in this question, ABC Limited is having only one building, and that building is of 4-storied. Out of that 4-storied, the top floor is leased out. Here leased out, they are leasing it through operating lease. So they are leasing it out to XYZ Limited. Out of the 4 floor or 4-storied, only the top floor has been leased out to XYZ Limited. Rest of the 3 floors has been taken by or used by the owner itself as administrative purpose. So here we have to see which one is having or which component is having more significant out here. So let us look into the solution. There are 2 components, owner occupied and leased out. Since these 2 components are within one building, it is assumed that they may not be sold separately. 3 of the 4 floors are owner occupied, and it is the significant component. So therefore, ABC Limited must report the entire building as owner occupied property, which is under BAS 16, property, plant and equipment. So let us look into the disclosure of investment property in financial statement, how the company can disclose or how the company can represent or show the investment property in their financial statement. Here I'm basically talking about statement of financial position. Where can the company show their investment property under financial statement? You can see there investment property is listed under non-current assets. It is a separate account. It should not be clubbed with any other account. So you can clearly see here that investment property is under non-current assets. Derecognition of investment property. When can a company derecognize or remove their investment property from books of accounts? The derecognition rule, when can you remove your investment property from your book, in BAS 40 are similar to the rules in BAS 16. Investment property can be derecognized in 2 circumstances. First one is on disposal, which is while at the time of selling. And second one is when the investment property is permanently withdrawn from use and no future economic benefits are expected from that investment property. So these are the 2 circumstances under which a company can derecognize their investment property. Any gain or loss on disposal should be recognized in income statement. I have got 3 learning activities for you all. The first learning activity is D&T Company operates a logistic and courier service business. On 1/1/2019, D&T rented 10 refrigerated trailers to another similar logistic company, ST Logistics. The contract was signed for a period of 5 years, for which all costs related to maintenance and repairs will be borne by ST Logistics. These trailers are acquired at Nilton 2.1 million each in 2018 and are depreciated at straight line method over 15 years. Discuss whether the trailers can be accounted as investment property. That one is first question. Let us look into the second question. Karma Limited purchases a building for Nilton 25 million. The entity intends to lease out property under operating lease over the next few years. The entire amount of purchase consideration has been paid to the seller as on the reporting date. However, Karma Limited has still to pay the stamp duty and registration charges. Discuss whether Karma Limited can account the building as investment property. Now the third question is, Jigme Company have a building with 2000 square meters and they use 500 meters as their own office and rent out 1500 square meters to tenants to earn rental income. Discuss the accounting treatment for the above property in Jigme Company's financial statement. Assume that the portion of the property can be sold or leased out separately. This is the end of the lesson. Make sure you all complete all the 3 activities provided in this lesson and also make sure to stay safe. Thank you.